coming in stronger than expected for the month of August. Consumer spending still on the rise in the face of a possible economic slowdown. Let's bring in Simeon Siegel, senior research analyst at BMO Capital Markets, covering retail. Simeon, great to have you on. Let's, I guess, start with the macro. It seems as if, you know, a lot of concerns around aggregate consumer activity. It hasn't necessarily really fallen away in a major way. A lot of people talking about a more careful consumer. How do you read it?
Hey, Mike, good to see you. I would say what we're about to talk about is going to be a fantastic juxtaposition to the conversation you just had. Because listening to Scott and Jeff, I mean, I'm hearing all this doom and gloom, and I think that there is no question the macro seems worse than it was when everyone was flush with stimulus. But I think whether it's today or whether it's, I mean, we got a whole slew of earnings a month ago, people are still spending. And you and I talk about this all the time without making a judgment call, whether it's healthy or not. The U.S. consumer is overly resilient when it comes to spending.
So there's no doubt there's resilience, and yet what we've seen, I guess, in terms of the market and how it's rewarding and penalizing different companies is investors seem to want to hide in the big box stores or the ones that seem to be value leaders. What does that mean for your coverage universe and where you're finding companies that still seem to, you know, have a decent story to tell?
So I think it's really interesting. I think that what you're describing, if you wanted consumer exposure, there were big companies like Nike and big companies like dollar stores and big companies, just all these global businesses that people were comfortable with, that then all of a sudden they became increasingly less comfortable with. And so the question you have to ask, and this is a little bit of a game theory question that's above my pay grade, is do you look at losing beacons of safety as a game of dominoes, and then you have to be worried about the ones that are still safe? Or do you view them as the scarcity value is just going up? So TJX, the multiple, it's an excellent business. You and I have talked about this one a lot. Can you just ignore the multiple? And so what's interesting is from my conversations with investors, at least for right now, the answer to that is increasingly yes. It's people are watching their core safety elements fall away. And so they're moving, they're effectively willing to pay more for the ones, classic supply and demand. I think that's the reason. So when I look at it, when I talk to my investors, I'm trying to go again, sell-side analysts are supposed to say the word barbell at least every conversation, so I'll just say it now. The barbell that I'm looking at is, call it TJX, that off-price business, which becomes increasingly important not just to consumers in tough environments, but to brands as department stores shrink. They need a place to move them. That's one side, recognizing it's expensive, but it's expensive for a reason. On the other side, my team just did a big deep dive into Under Armour. Right? Not the type of company you would put neck and neck with TJX, but here's a business that's incredibly large. People have written it off for dead, which doesn't make sense because of its billions of dollars of revenue, but it's also really sick. And now you have Kevin Plank coming back in and saying, you know what, I could do more with less. I could achieve more by doing less. And so in a world where investors are worried about how hard is it going to be to generate another dollar of revenue, I like a business that's actually going to win because it's donating the revenues. And it sounds counterintuitive, but some of these businesses just overstretch. Some of these brands dilute themselves, and the best fix is by doing more with less.
Yeah, it seems like sometimes the incremental revenue is kind of empty calories, I guess, in some situations. You mentioned last week, and I think it's interesting, you say investor appetite for finding compelling underappreciated retail longs is incredibly low right now, which I guess for you makes you have a sales job here. So what are the things that are being overlooked aside from Under Armour, do you think, that you think are worth some attention?
So the beauty of my seat is I have incredibly long duration, right? We think about hedge funds having somewhat shorter, than mutual funds having longer, and then analysts without capital on the line being able to just look for ideas that they like. I think that this is a classic mid-September into October event. We looked October, sell in May, go away is a great rhyme. Sell in October doesn't rhyme with anything, so no one says it. But October ends up being the second worst month for my group. And it makes sense. There's no catalyst. There's no shopping catalyst. We're far away from back to school. We're not yet at holiday. There's no investing catalyst because we already had the 2Q earnings and we're not going to get 3Q. Again, very important holiday period. And so what ends up happening is you get these doldrums. And so from an immediate time perspective, all that fear that Scott just brought up earlier, that's going to be what people are talking about. It's hard to ignore the macro. And second derivative, it's not getting better. But what that means for those that are willing to look past that is to say, okay, I actually believe that the environment's not as worse as it seems, or at least people are going to spend their way through it. If that happens, then you can find businesses like a Victoria's Secret, like a Bath & Body Works, businesses that arguably are good businesses that are struggling with the time right now, that you're getting a multiple gift. The valuation's coming back down. And so that's why I created that TJ Under Armour conversation where you get to play both sides. But if you're just looking at what's going on now, appreciating that you're going to lose news-driven catalysts, theoretically is a reason to be concerned, or it's a reason to dig in and say, okay, as long as I make it to November, which isn't that long, then there are these compelling opportunities. That's how we're approaching it.